Welcome to the Vulture Podcast channel and the Deep Dive. So the headlines are everywhere, aren't they? Tesla profits down, sales are slowing, and, well, some people are even using the B word, bankruptcy.
Yeah, it's definitely buzzing.
Is it just, hype? Or is there actual fire behind all this smoke for the EV giant? Today, we're skipping the guesswork. We're really going to dive deep into the numbers, the analysis, see if this recent news truly means Tesla's in some kind of crisis.
Exactly. And to do that, to get a clearer view, we've pulled together quite a range of sources. We've got an academic study looking long-term, comparing Tesla's financials, revenue, profit, market share against GM, Ford, and Toyota that covers 2019 to 2023.
Okay, so a baseline.
Right. Then there's a Motley Fool piece looking at the long game for Tesla, thinking about the EV side versus these big AI plans they have.
And for the immediate picture, we're looking at transcripts, right? Forbes and ABC News videos breaking down the Q1 2025 earnings.
Yep, the very recent stuff. And we also peeked at Reddit, a thread asking point blank if people think Tesla's heading for bankruptcy.
And another one talking about, what happens to Tesla owners if the company did collapse. Bit grim, but relevant.
Definitely something owners would worry about. And finally,
simply what I was saying, for a quick look at their balance sheet, the current financial health metrics, just the raw numbers.
okay, so our mission here is basically to pull all these different viewpoints together, give you a really informed take on where Tesla stands financially right now, the hurdles they're facing, and I guess where they might be headed. Try to cut through the noise a bit.
Yeah, give you the clear insights without drowning you in data. All right, let's start with that historical context then. The academic study, 2019 to 2023. How did Tesla stack up against the old guard back then? What were the big takeaways?
Well, the most striking thing, honestly, is just the growth difference. The study highlights Tesla's, remarkable revenue growth. It was averaging, 18.8% increase every single year? Yeah, it shot up from about $24.5 billion in 2019 to nearly $97 billion in 2023. So while companies like GM and Ford were, moving ahead, Tesla was absolutely sprinting, completely changed the conversation on growth in the car industry.
Right. I remember seeing the GM numbers in the study, like $137 billion, up to $172 billion. And Ford was $156 billion to $176 billion. So good growth. But yeah, Tesla was just different. What about Toyota?
Toyota looked much more stable. Their 2023 revenue, converted to dollars, was around $37 billion. The study pointed to their consistent performance, solid free cash flow, kind of suggested a more maybe resilient financial base compared to Tesla's really fast expansion, which, can also mean more volatility.
Okay, but then there's the other side of the coin.
Yeah.
Profit. The study seemed to suggest Tesla's net income was, a bit all over the place compared to the others.
That's exactly it. Revenue growth, fantastic. But turning that into consistent profit, much more volatile for Tesla. GM, interestingly, even with slinger revenue growth, showed more steady net income gains. And Ford, the study suggested they were facing some financial struggles during that time, even while they were investing in EVs. So it really highlights the risk involved in Tesla's rapid scale-up versus the slower, maybe steadier profit path of the legacy automakers.
So the long view is super fast growth, big tech bets, impressive revenue, but profitability was less predictable. Okay, let's jump to now, or very recently anyway, Q1 2025, the Forbes and ABC reports. Sounds like the mood really changed.
Oh, dramatically, yeah. The Forbes piece called the Q1 results awful, and they were way below what analysts were expecting. Revenue, earnings, pretty much across the board.
Yeah, the numbers themselves are pretty stark. Adjusted earnings were only, 27 cents a share, and revenue at $19.3 billion when Wall Street expected over $21 billion.
Right.
But the big one seems to be net income, down 71% from Q1 last year, just $49 million.
$49 million. It sounds like a lot of money, but for Tesla, a 71% drop year over year, that's a huge red flag. And the Forbes analyst pointed out something really critical that kept even that $49 million positive.
Which was?
Regulatory credit sales.
Okay. Let's unpack that. What are those exactly, and why do they matter so much here?
So they're basically credits Tesla gets for making zero-emission cars. They can sell these credits to other car companies that aren't meeting their emissions targets. It's like a side hustle, basically, linked to environmental rules.
Okay.
And in Q1 2025, Tesla made a whopping $595 million selling these credits. So take that away, and Tesla actually lost money in the quarter.
Wow, okay. That completely changes the story. So the actual business of making and selling cars didn't turn a profit on its own. And you said this was their worst quarter in, 4 years for net income and earnings per share.
That's what the reports indicated, yes. And adding to the concern, vehicle sales volume was down 13% compared to last year, but their automotive revenue dropped even more, by 20%.
Which means?
It implies they didn't just sell fewer cars, they had to cut prices to sell the ones they did, squeezing their profit margins pretty badly. This is a really stark contrast to how they were performing before, with that consistent, strong growth.
Okay, so a pretty bleak picture for Q1. What reasons did Tesla give for this downturn, according to that Forbes report?
They pointed to a few things. One was, interestingly, brand blowback related to Elon Musk's activities, his public statements, associations, things like that.
They acknowledged that.
They did, yeah. They mentioned protests, souring consumer sentiment, especially in places like Europe and the U.S.
That's quite an admission. What else? They mentioned something about factories.
Plant modifications in Texas slowing down production, but the analyst in the Forbes piece sounded a bit skeptical about that being the main reason.
Why skeptical?
Well, because Tesla apparently ended the quarter with a lot of unsold cars sitting around, including the Cybertruck. So if they have unsold inventory, were production slowdowns really the bottleneck for sales? Maybe not entirely.
Good point. And didn't Musk himself say something about not spending enough time at Tesla?
Yeah, he apparently acknowledged he'd been focused elsewhere, maybe government stuff, and planned to step back from those duties to be more like a regular CEO again at Tesla.
Okay. But the analyst in that Forbes piece seemed to think there might be deeper, more fundamental issues at play, right?
Oh.
Beyond just Q1 hiccups.
Exactly. Longer-term worries.
Like, what were the main concerns from the analyst's perspective?
Well, a big one was a perceived lack of investment in new product development. I mean, the Model Y was their last really big mainstream launch, and that was way back in late 2019.
True.
The Cybertruck gets headlines, sure, but it's pretty niche. It's not the kind of high-volume seller they need to really drive growth right now.
That's a huge point. The car market moves fast. No new models means you risk falling behind. And they mentioned no clear successors for the Model 3 and Y, the big sellers.
Correct. And maybe even more concerning for the core business, analysts are now actually predicting an overall decline in Tesla's vehicle sales for the full year 2025. That's after sales already dipped last year. So that whole growth story is really shifting.
And instead, it seems like Tesla's pushing this narrative about AI, robotaxis, the Optimus robot.
Yeah.
That's the future.
That's definitely the vision Musk is pushing hard. But, it raises questions like, what happened to that promised $25,000 Tesla, the Model 2? Is the Cybercab robotaxi replacing that? It's all a bit unclear.
Yeah, confusing.
They say cheaper versions of the 3 and Y are still coming this year, but there aren't many specifics.
And then there are tariffs. You mentioned those. Q1 was mostly before the recent big ones, but it's a future worry.
Definitely. Tesla's CFO acknowledged it's a source of uncertainty and could have an impact. Analysts are already downgrading their sales forecasts, partly because of potential tariff effects.
Okay, but the Forbes analyst really hammered on the brand issue, didn't they? Linked to Musk's politics.
Yeah, they stressed that this is a problem pretty unique to Tesla compared to other automakers, and it's become a significant drag, hurting how consumers feel about the brand.
Okay, so we've got the history, the recent slump, the potential reasons. How's the market reacting? Investors.
That Motley Fool article took a longer view, right? It did. Motley Fool basically said, look, if you just look at standard stuff like the PE ratio, yeah, Tesla stock looks expensive compared to, say, Toyota or BYD.
Makes sense.
But their argument is, if you believe in the AI potential of the robotaxis, Optimus, then maybe, just maybe, it's actually undervalued now for someone willing to take a long-term risk.
They mentioned some pretty wild projections, didn't they? ARK Invest thinking robotaxis could bring in more revenue than Tesla made in total in 2023.
Yeah, massive potential upside if it pans out. And Morgan Stanley thinks Optimus could disrupt, like, a huge chunk of the global labor market eventually. So the whole bull case, the optimistic view, really hangs on successfully delivering these huge AI projects.
Right.
Motley Fool even brought up Warren Buffett, be greedy when others are fearful, suggesting maybe the negativity now is a buying opportunity for the long haul.
That's the optimistic take. But what about the immediate fear, that Reddit thread asking about bankruptcy? What was the feeling there?
It was really mixed, actually. You had some people genuinely worried, pointing to falling sales, the Musk controversy saying bankruptcy is a real possibility.
Okay.
But then others pushed back, highlighting Tesla's, still positive revenue, the big cash pile. They have like $36 billion cash versus $28 billion in current liabilities, and their overall asset value. Saying, basically, bankruptcy isn't an immediate danger.
So, split opinions.
Yeah.
Fear versus looking at the balance sheet. But people were worried about what happens if things go south.
Oh, right.
Like the Fisker situation?
Oh, yeah. Big time. That was a major theme. People worrying about, okay, if Tesla collapses, what happens to my car? Software updates, stop. Can I get parts, service? What about the superchargers?
Yeah, because it's such a closed ecosystem.
Exactly. The Fisker comparison really hit home for some, showing the risks when you're locked into one company's tech and service network.
And was there talk about buyouts or Musk's role again?
Definitely. Speculation about whether another automaker might swoop in if Tesla really struggled. And lots of chatter about Musk. Is he a liability? Is he losing interest in the car side of the business? That came up a lot.
Okay. And what did Simply Wallsaint add? Just the raw balance sheet data?
Pretty much. They showed a low debt-to-equity ratio, only 9.6%. Total debt around $7.2 billion, but cash and short-term investments way up at $37 billion. So on paper, the balance sheet looks reasonably healthy, lots of cash compared to debt.
Seems solid enough.
Their short-term assets cover both short-term and long-term debts too, which is good. However, there was one slightly concerning metric, a negative interest coverage ratio, minus 5.6x.
Meaning?
It means their operating profit, their EBIT, which was about $7 billion, wasn't actually enough to cover their interest payments on their debt. So they're dipping into cash or other sources for that.
Ah, okay. So plenty of cash now, but if profits keep falling, not being able to cover interest payments from operations could become a problem down the line.
Precisely. It's something to watch if profitability doesn't improve.
All right, so wrapping this up, future outlook. The Forbes analyst had some key questions for Tesla moving forward.
Yeah, two main things, really. First, will Tesla get serious about developing actually new car models? Not just cheaper versions of the 3 and Y? They need something fresh to fight back against Hyundai, Kia, GM, Rivian, all the others catching up, and maybe help fix that brand image issue.
Makes total sense. Just cutting prices isn't a long-term strategy for excitement. What's the second point? Robotaxis.
Exactly. Can Tesla actually deliver on the robotaxi promise safely, reliably? Especially since their approach, relying mainly on cameras, is so different from competitors like Waymo, who use LiDAR and radar much more heavily. That planned robotaxi launch in Austin this June, that's going to be absolutely critical, a huge test for their tech and their whole AI narrative.
So a lot still hangs in the balance then. Will they reinvest in the core car business with new products? Can the robotaxi dream become reality? Seems like those are the big questions shaping their future.
Absolutely. The next year or so should tell us a lot. We'll see if the strategy pays off or if the cracks start to widen.
Okay, so let's try and summarize this whole deep dive. We saw Tesla's amazing historical growth, but profitability was always a bit shakier. Now, Q1 2025 looks like a real downturn. Factors seem to be brand issues, maybe a lack of new cars.
Right. And while the AI future robotaxis, optimists sound incredible and get some investors excited.
The market and, well, people online are pretty divided. There's optimism, but also real concern about the current challenges. And yes, even the bankruptcy word keeps popping up.
Which brings us to, I guess, the final thought for you, the listener. Given everything we've talked about the current struggles, this huge pivot towards AI, is Tesla still fundamentally a car company that also does AI? Or is it changing, like right now, into an AI company that just happens to make cars? And what does that shift, if it's happening, really mean for its future, for its success, and how you even think about the Tesla brand?
That is a really interesting question to chew on. Well, if you found this deep dive into Tesla's situation useful, definitely subscribe to the Vulture Podcast channel. We do these explorations regularly. Thanks so much for tuning in today.